Well, what's going on YouTube? In this video, we're going to talk about Li Auto, ticker symbol LI. We're going to go over Li Auto's financials real quick. We're going to have to do it candidly because this is a foreign company, so it's hard to read their financials when they're in RMB, different type of currency. So we're going to go through it on Seeking Alpha's financial list here, best that I can in terms of how it's laid out. And then after that, we'll look at the valuations, come out with a fair market value on Li Auto, and then also look at the stock chart and figure out where the technicals are currently trading and what price action might be headed in the future. So currently, Li Auto year to date is up 85%, 1 year up 50%. Over here, we're going to begin at the income statement. One thing I wanted to note out on the quarterly is down here at net income. We are starting to turn positive in the last 3 quarters, 3 earnings releases. So that's good to see. Consistently, not just like one here. We're consistently, obviously, we're down, down, down. Now we're turning around, which is awesome to see. Our operating income also is turning a corner here. We are consistently positive 2 quarters in a row and heading in the right direction. Also, revenues we can see here are growing and growing and growing. So awesome. Good job by them over there at Li Auto. Back to the annuals here. We can, again, back to the revenues. We can see we have crossed over that $10 billion revenue in the trailing 12 months. Gross profit, $2 billion, continuously growing in gross profit as well. Operating income, negative on the trailing 12 months, mind you. So this is in terms of quarterly, we're doing much better than that. So, but we are still headed in the right direction annually. Net income, we are positive net income for the first time annually. Over here at the balance sheet, cash equivalents, we have total amount of cash of $9.9 billion, and that continues to grow. Our inventories are up a little bit, but they spiked at 986 million and have since been reduced a little bit, which is good to see. Total current assets, 11.3 billion. Total assets, 14 billion. One of the negatives that have seen, I've looked through this before already, it was this accounts payable. This was like the only real negative that I saw that I was like, I don't really like to see them owe their vendors more money, because then it shows up as a net positive on your cash flows, and then it kind of skews your cash flows overall, and I don't like that. Anyway, so they added $1.4 billion to their total current liabilities, which then gives them, a higher free cash or higher cash flow amount because this is money that is kept within the company. So since it's grown as a liability, it's going to show as they cash flowed into the company, even though this has to get paid for. So total current liabilities, they owe $6.4 billion within the 12 months. Total liabilities, $7.4 billion. So really solid in terms of debt. Like after they pay off all this debt this year, they only have like an extra $1 billion in debt, which is fantastic for an auto company. So they've got just shy of $10 billion in cash and they owe $7.4 billion in liabilities, right? So really well done balance sheet, very solid, especially for a car company. The net income, we got 253 million. We still got some stock-based comp. This is a growth company, so to be expected for sure on stock-based comp. And honestly, that's smaller than what I would have expected. So $276 million in stock-based comp. We can see here, there's our accounts payable that I was just pointing out. So it increases our cash from operations. Basically, almost all of it is from that. Otherwise, there's $700 million roughly there of actual operating activities, right, from the business. So, but this is the number we get. We minus our capital expenditures here of 789 million, which gives us roughly 2.4-ish billion dollars of free cash flow. A little further down here, we can also see they issued more common stock. So in total, 340 million plus 276 million in total stock base, dilution. And back at the balance sheet at the bottom here, we can see our total shares went from 977 million up to 983 million shares. Over here at the valuation spreadsheet, company statistics, we're sitting at $39 billion, enterprise value of $32 billion. They do not pay out a dividend, financial efficiency. Again, this is a growth company, so we're not going to expect too much out of return on equity and invested capital, but we do want to see this trending in the right direction. So return on equity, 4%, like to see 15 or more. Return on invested capital, 8.6. Would like to see 15 or more percent. Shares outstanding, 1 billion. They rounded up a little bit on that one. So we have our operating cash flow of 3.2 billion, our CapEx, which we already went through, so it's 2.4 billion in free cash flow. Gross margin, 19%, operating margin, 0.3%. We did see that start to turn positive, so this number will start to grow into the positives here soon. Profit margin, 2.47%. So hopefully they can also start to change these two numbers into the green versus and grow them beyond where they're sitting at right now once they become more efficient. Analysts have a price target on this company of $43.79. Down here, our return on invested capital. We can see not a lot of data here, but we can definitely see we are starting to turn into the correct direction. Obviously, we were so negative. We were flat for a few years, went a little negative, and now we're starting to turn positive. So, okay, it appears to be potentially trending in the correct direction. So, first things first, we got Peter Lynch valuation. We have our forward EPS growth rate. We have our revenue growth rate. Gives us a Peter Lynch fair value of $16 per share. We have some multiples to compare to. I did not put I did not put Neo in there or Xpeng in there because they are not profitable. So I used other manufacturers, car manufacturers, gives us a price tag of $5.88 a share. Manual PE over here, we have a market cap of $41 billion. Cash equivalents, 9.9 billion. Our debt, only 7.4 billion. We have more cash than debt, which is very rare to see, honestly. Cash from operations, we do $3.2 billion in cash from operations, which gives them, honestly, years to market cap of only 12 years. That's pretty good. Price to book, we're sitting at 14 billion total assets, 7 billion in liabilities, which you've seen. Outstanding shares, 984 million shares outstanding. Gives us a price to book today of 4.64, 5-year average 4.8. Peg ratio today is 1.99. So I put in 39.42 for our forward-looking peg. I got this off of Seeking Alpha, 39.42. So that gives us a forward peg ratio of 0.47. Looking pretty good over here in terms of these valuations here. Li Auto, we have, because this is a growth company, I put in a 0. So that gives them an intrinsic value of $1.74 a share. If their EPS grows a lot more, that'll really increase their intrinsic value over here at the Grams valuation. Weighted average cost of capital is 8.91%. Perpetual growth rate 2.4. I put in 22% for free cash flow growth rate. We had analyst growth rate of 45%, our previous growth rate of 33%. So I just kind of went in the middle there a little bit and said 22% is where we're going to go with for our free cash flow growth rate. You can see our free cash flow, 337. These are negative numbers. Now we're turning positive in free cash flow, and it's looking good. It's heading in the right direction. And obviously, this is not including the most recent year, which we saw is at like $2.4 billion. So they're heading in the right direction very well. So we could even potentially put in 45% there. Why don't we do that? I feel like that's a fair number, especially with how rapidly they're growing. We know our cash is $9.9 billion. Gives us a DCF price per share of $35. EPS 0.23, current PE 1.73. Lowest EPS growth rate was 70. So we put 70 in over here, and then 70 goes into 72 one time, basically. And what we're going to do is we're going to double our EPS 9.7 times. So basically 10 times puts us at a future EPS of 235. Possible, yes. But that also gives us a fair value of $4,100 per share. So let's maybe put in more of a realistic, number, and maybe this company will be worth $4,000. Maybe it'll be just like Tesla, and it'll be, it's possible, right? Anything's possible. But let's give them like a 50. What's 50 give them? So even 50 is super up there. Let's give them 15. So 15, an EPS of 15 gives you $525 per share. How about 5? 5 gives them $175 per share and purchase price of $122.50 a share. So, you know, if this company can do it, that kind of gives you an idea of what this company could potentially be worth in the future here. So, you know what? We'll keep it at about that. I feel like that's a fair number. I feel like that's definitely doable within the company, especially with how quickly this company is currently growing. So that over here gives us our valuations. We got all five valuations, giving us an average price of $46.87 a share. So we analysts had a price tag of $44 and 43.79 a share. So, that seems fair. That seems like a good number. Analysts are at 43, we're at 47, so I mean, I'm good with that. Our peg ratio we know is just below fair market value. We're in fair market value territory today. Our forward-looking peg, which we can see is at 0.47. That's very, very undervalued. We've got our years to valuation, which is sitting at 12 years before we earn our current market cap. I mean, there's nothing here to hate on, really. You can see the growth, you can see the financials heading, all of them are heading in the right direction. This company's debt is so minimal for a vehicle manufacturer, which is very impressive. Um, I think this company's got is worth digging into and learning more about and seeing how they're able to keep their cash so or sorry, how to keep their debt down as well as they are. I think that's a big question here is how, why, what are they doing that other car manufacturers aren't? Maybe get a better understanding of that because that's the only thing that I see that's like very impressive. Everything else is very impressive, but so is that. So I think Lee Auto is worth a deeper dive for sure. But let's take a look at the stock chart. Overall, right now we're trading at about 40 or sorry, about $39 range here, 39 to $40. So we're hitting a resistance area for sure. So you can definitely see we're trading overall in an upward channel, upward direction. We have this upward trend line. So there's a chance, maybe it pulls back to here. I don't know that it will, honestly. If you look at these financials, they're still delivering record number of vehicles in a economy that's kind of struggling over there in China. Um, it's not showing any signs of slowing down, really. I mean, the deliveries have slowed down a little bit, but overall, they're growing year over year tremendously. You know, I think this is one to watch for sure, and maybe one to invest into. I would definitely would take some time and look into it further beyond what beyond what the price tag is on this fair market value. Look to see if this is a company that you think is going to continue to grow, and it might be another contender. It might be the leading EV vehicle over in China someday. Anything's possible, right? So. But that's it on Lee Auto. If you found value in this video, drop a like, subscribe, and we'll be back later with another stock and house video.